Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings. And let me tell you, ENBRIDGE Inc's latest annual report is quite the saga filled with numbers that might make your head spin, but also some real nuggets of truth about where this energy giant is heading. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. And hey, if you want to dive even deeper, join our Discord community linked in the description below. Before we dive in, think about this. ENBRIDGE is basically the highway system for energy in North America. They move gas and oil, and they are also dabbling in renewables. So getting a handle on their operations is key to understanding the energy landscape. Today we are going to break down their 2025 annual report. Let's set the stage a bit. ENBRIDGE had about 14,800 regular employees at the end of 2025. That is a pretty big operation. First up, we have liquids pipelines. This is where ENBRIDGE moves crude oil and other liquid hydrocarbons. They are the biggest player in this field, globally moving around 6 million barrels a day. Their mainline system is like the superhighway for this. It is huge, stretching across Canada and the US. In 2025, they were busy investing in this system, planning to put up to $1.3 billion into it through 2028. This is all about keeping those pipes running smoothly for years to come and making sure they are more reliable and efficient, because a lot of people need the energy they move. Now let's talk about gas transmission. This is where ENBRIDGE invests in natural gas pipelines and storage facilities across North America, and they are also getting into renewable natural gas. You know, that cleaner gas made from things like garbage and farm waste. Their US gas transmission business is massive. They have stakes in pipelines like Texas Eastern and Algonquin Gas Transmission. Think of these as the arteries pumping natural gas to homes and industries in the Northeast, the South, and the Midwest of the US. Even with all these big projects and pipelines, they ran into a bit of a snag this year. Looking at their financials for gas transmission, their EBITDA, which is basically a measure of operational profit, declined by $780 million. This was mainly because a big chunk of that profit in 2024 came from selling off parts of their Alliance Pipeline and business. So while operational results were actually pretty good, the overall EBITDA picture took a hit. Scroll gas distribution and storage. Scroll, then we have gas distribution and storage. This is the part of ENBRIDGE that directly serves homes and businesses with natural gas in places like Ontario, Quebec, Ohio, and several US states. They added about 68,000 new customers in 2025, which sounds great. However, the numbers here are a bit tricky. Their EBITDA was impacted by a significant $330 million impairment. This means they had to write down the value of some assets. Why, you ask? Well, it's because of a decision by the Ohio Commission related to their gas utility business. The commission basically said some costs related to pensions and other things would not be recovered through customer rates. This is a major setback for this segment as it really ate into their earnings. Scroll renewable power generation. Scroll. Let's switch gears to renewable power generation, where ENBRIDGE is investing in wind and solar farms in North America and Europe. They are growing this business quite a bit. They completed the first phase of their massive 815 megawatt Sequoia solar project in Texas in late 2025 and have more phases coming online. They also sanctioned new solar projects in Texas and Wyoming. So the move into renewables is real and showing signs of growth. Scroll eliminations and other. Scroll finally eliminations and other. This is for costs not directly assigned to the main business segments like corporate expenses and some financial activities. The big story here is the $3.5 billion positive impact on EBITDA, which sounds amazing, right? But almost all of that came from those fluctuating derivative values we talked about earlier and the absence of some one-time costs from 2024. So the core business in this area actually saw a decrease in EBITDA. Overall, ENBRIDGE brought in a massive 65.2 billion Canadian dollars in total operating revenues in 2025. That is up significantly from the previous years. But the real star of the show for investors is that EBITDA number, which jumped to 20.5 billion Canadian dollars in 2025. That is a huge leap from 16.9 billion in 2024. A big reason for this jump, aside from the operational improvements, was a 1.3 billion Canadian dollar unrealized gain on their derivative financial instruments. So quite a bit of that earnings boost was a paper gain, not necessarily from extra cash flowing in from their core business. A major strategic move for ENBRIDGE was the full year of contributions from the US gas utilities they acquired. This really boosted the gas distribution and storage segment. Scroll Liquids Pipelines investment. Scroll in their core liquids pipelines business. They announced plans to invest up to $1.3 billion into their mainline system through 2028. That's a lot of money focused on keeping those essential energy highways in good shape. Scroll Sea Pipeline System. Scroll, a really interesting partnership development, was the First Nations partnership investing 736 million Canadian dollars into their West Coast BC pipeline system. This is about building stronger relationships with Indigenous communities, and that is a financially positive move for ENBRIDGE too. Scroll's transmission rate proceedings. Scroll, there were rate cases happening across their gas transmission business. Companies like Algonquin and Texas Eastern saw settlements that bumped up revenue, which is good for ENBRIDGE. Scroll and Bridge Gas Ohio scrolled back to the gas distribution business. ENBRIDGE Gas Ohio had a real rollercoaster with the Ohio Regulatory Commission. They filed for a revenue increase, and then the commission ordered decreases and disallowed some costs, including pension assets. While ENBRIDGE is appealing this, it shows how much regulatory decisions can impact their bottom line. They also filed new rate cases for other US utilities, which is standard procedure. Now let's talk about debt. ENBRIDGE carries a lot of debt, a total of 105 billion Canadian dollars. Like most pipeline companies, they use debt to fund their massive infrastructure projects. While this level of debt is typical for the industry, it's something to watch closely. Good news on the liquidity front though, they have about 9.7 billion Canadian dollars available on their credit facilities. That means they have plenty of cash on hand to weather any storms or fund upcoming projects. Scroll Corporate Vision and Strategy Scroll looking at their overall strategy. ENBRIDGE talks about an all-of-the-above approach to energy. This means they are invested in traditional energy sources like oil and gas while also pushing into renewables and lower carbon solutions. They see a need for all types of energy to meet growing global demand, and their diverse asset base positions them to play in all these areas. Scroll Safety and Operational Reliability. Scroll, their top priority remains safety and reliability. This is absolutely crucial for an infrastructure company like ENBRIDGE. Scroll extend growth. Scroll, they are focused on growing their business through expanding existing infrastructure and investing in new projects, about $39 billion worth through 2033. They also highlight strategic partnerships and ongoing efficiency improvements. Scroll cyber attacks and other cybersecurity incidents pose significant threats to our technology systems and could materially adversely affect our business operations, reputation, or financial results. Scroll now here is a really important risk factor that we see more and more companies talking about. Cyber attacks. ENBRIDGE explicitly states these pose significant threats. They are investing heavily in security, but acknowledge that they and their vendors have experienced attacks and expect more. The consequences could be huge, from revenue loss to reputational damage, and even regulatory fines. The increasing use of AI also adds another layer of complexity and risk to their cybersecurity efforts. Scroll, there are utilization risks with respect to our assets across all business segments. Scroll, and of course there are utilization risks. This is basically the danger that their pipelines and facilities might not be used as much as they expect. For pipelines, this can be due to market prices, competition, or even regulatory issues. For renewables, it comes down to weather patterns. Scroll are positioned to fossil fuel development in conjunction with evolving consumer preferences, and new technologies could underpin energy transition scenarios impacting long-term supply and demand of crude oil. Scroll the filing also highlights the risks from opposition to fossil fuels and changing consumer preferences. They acknowledge that these could impact long-term demand for their services and the value of their assets. This is the energy transition playing out, and ENBRIDGE is trying to navigate it by balancing traditional energy with growing investments in lower carbon solutions. So what is the verdict on ENBRIDGE? Well, they are a massive integrated energy company with a really diverse portfolio. Their core pipeline businesses are strong and well contracted, providing stable cash flows. The acquisitions in the US gas distribution sector are significantly expanding that part of the business, though regulatory headwinds, like what happened in Ohio, are a real concern and show how volatile this industry can be. Their renewable energy segment is growing and strategically important. Financially, they are managing a lot of debt, but that is typical for capital-intensive infrastructure businesses. Their EBITDA growth in 2025 was impressive, but a good chunk of that was paper gains from derivatives. Investors should look beyond that to the operational performance, which shows solid results in liquids and transmission, despite some individual segment challenges. The key weakness is that reliance on regulatory approvals and the continuous need to navigate environmental and political landscapes. The risks around pipeline opposition and climate policy are very real. Overall, ENBRIDGE is a utility-like business with growth ambitions. They are investing heavily in their existing infrastructure and expanding into renewables. While they are managing their debt and capital well, the regulatory environment and the ongoing energy transition are the biggest wildcards. They are clearly trying to position themselves for the future, but the path forward will involve careful management and adaptation. Alright, that is our breakdown of ENBRIDGE's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.